The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed it out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
Good morning, everyone. Welcome back to another live stream. I hope you're doing well. Stock market is starting to look green again. It's a new day and a new high, looks like. We got SP500, NASDAQ both in the green this morning. We also have the dollar index up a little bit. Take a look at that. Dollar regaining some strength. Very nice to see that. We'll see where the dollar index goes next, but I actually think that this resistance area, I think we're going to test the upper limits of this. You've got a couple catalysts for dollar. One was a big surprise that came this weekend, of course, with the Japanese prime minister changeout, who is perceived to be a dove for the Bank of Japan and for kind of monetary policy. I mean, just take a look at the reaction that we saw yesterday. I mean, the story yesterday was truly a Japanese one. The Japanese stock market, you did have obviously the huge bump in semiconductor stocks in the US, but even more impressive in terms of an overall index view is the fact that the Japanese stock market over the weekend gapped up and ended up being up 5+% yesterday on the day, which is a pretty incredible move, to say the least, to get that kind of move in a single day on an entire stock market index. And maybe the most impressive part about this is that you can have these kinds of moves, 9%, 5% move on a stock market when you have had a sell-off. It's more common, actually. A lot of times the biggest up days in stock market land are preceded by big down days. It makes sense. Like you get like the big sell-off, panic, and then there's like a big short squeeze, short covering, bulls jump back in, and you can have these kind of one-day giant up moves. You saw that in the stock market. U.S. stock market was up 10% one day. It was a crazy, crazy day. Now, for Japan, though, the reason this was just so remarkably impressive was that you had a 5% up move, which was preceded by the day before Japanese stock market was up 2%. So this move here between the 2 days, the Japanese stock market made a move of almost 8%. And it did so at the all-time highs. Very impressive stuff. Like I said, you can get those kind of huge sharp day moves, no problem in a down market where some good news comes out. But in a good market, a good news market where things are very optimistic, and then you get 5% up, very impressive. So again, Japanese stock market to the upside. At the same time, the catalyst for that was Japanese yen to the downside, right? Dollar yen jumped up. I ended up taking a profit on this move. Looks like a little bit too early because it's still going here. You've got Japanese yen to the upside here. Dollar versus Japanese yen to the upside here, coming up to test this 151 area this morning, testing a multi-month high. And we'll see if we can break through this area. You may have more room to run on this trade that we're seeing happening in Japan. I mean, if you can break into the 150s, if we take a look left, the next major area of resistance is all the way up here around 158.50, let's call it. I mean, that is some room for expansion on the dollar yen to the upside, especially if you're kind of like me where you think the US dollar downside trade may have kind of exhausted and that we may have more room for the dollar index to expand higher. So I do actually think path of least resistance for dollar yen is continued move. I think your next key spot to watch is current levels. Can we break out through this kind of high that we put in through March, April, August? Can we get a breakout that can stay above this 150 level? And if so, it's a good chance. I think you have follow through up to that next kind of key area of resistance at 158. Long story short, I think dollar yen has upside. Going to the dollar as a whole, I am long the dollar. I own UUP, which is an ETF that tracks the dollar on the US stock exchange. I think that the dollar itself has room to also expand higher. Coming up to this area, I think is going to be our next challenge, 98.80, let's call it 98.50, somewhere in this range, near current levels. The dollar index does have some pretty significant resistance. The question becomes, can you actually, same as dollar yen, decidedly break out, get above 99, stay there, in which case I think momentum continues to favor the bulls here. And momentum is hard to, you're still in a choppy market if you zoom out. You're talking about, we've been in the same price range since June, really since April. We've really not gone too much further to the downside on dollar. And I made the point that on that Fed day, Powell sounded kind of hawkish, that we still have inflationary pressures to deal with. I mean, we didn't get the jobs report, and we're supposed to get it on Friday, but the government's still shut down. So we might postpone that again. So I think what we're going off of right now is GDP growth really strong in the US, and specifically Japanese yen weakness is propelling dollar strength. Because again, if Japan's kind of going to go more dovish, it's all relative in currency land. If the Japanese yen is more dovish, that on a relative basis could mean strength for the US dollar. So when it comes to dollar index, I think you have room to expand up to this 100 level. We may pause here, but we'll see. If we can get above into the 99s, I think we're going to 100. Any sort of decided breakout through these highs, to me, is an opportunity to maybe trade the breakout. Again, not financial advice. That's just what I see. When it comes to the dollar, I am long UUP. US stock exchange opens up in 20 minutes. So I can pull up the trade there when things are opened up. We have VIX trading lower here. VIX hasn't really moved very much, still slightly elevated off of its lows. Stock market, despite that, though, continues to rally higher here. Really interesting. Taking a look at precious metals, gold is up again today. Nobody is surprised, not a single person. Gold has just been on the most impressive rally. I think this might be the most impressive rally I've ever witnessed in, oh no, it definitely is. Between like what's happened in the last few years, in terms of my trading life cycle, this is the most impressive rally I've ever seen in gold. It's a monster, man. This is just, it's incredible to watch. Just how bullish something can be day after day after day after day. Congrats to the bulls, honestly. It's been a monster. I do think, I've said this a couple times here recently, I think you're due for a pullback. I listened to Chris Pulver talk a little bit about this yesterday, about how, precious metals probably due for a pullback, like if we're all being honest. But as I've said, countless times, it's not something I want to time. But I do think you're probably due for some pullbacks. You may get, another leg higher and then some pullbacks, but I think it's time, right? You've had a massive surge higher in precious metals. Typically things don't move in straight lines forever, though they can do so for a lot longer than we think. So I could be early even still to thinking, I've said the last week or so, I think precious metals can pull back. We could still be early. Like we could get a pullback, but maybe it's once we hit 4,200 an ounce, then we get the pullback, right? So again, not something I'm trying to time, but would be a dip buyer, on a longer term basis, perhaps in like my other portfolios where I'm more, kind of parking stuff. If we were to get, a healthy pullback on this big move we've seen longer term, 50%, 61.8% retracement, I'm probably a buyer. Well, I am a buyer. I mean, I've been a precious metals bull for years. I own physical metals in my other portfolios. I just hold it. You know, I'm thrilled to see it. Although from a trading perspective, I think there is some room for pullbacks. Yeah, gold is just absolutely, it's just soaring, man. This just goes to show when something is in momentum, true momentum does not yield for anybody. I mean, the countless people trying to short and fight this move, I mean, it is just, it's like trying to move an impossible to move item. Like it just keeps going and going and going. It's like trying to jump in front of a train. So gold looks, from a momentum perspective, momentum looks completely intact. I mean, you could take your pick in terms of how you could measure that this momentum might be slowing down. Like let's just look at some moving averages. This is a Chris Pulver special. I mean, you are really far away from a lot of moving averages. So this is what I mean by, you know, we could be due for a pullback. Even just a move to the 20 period moving average right now is a 5.5% move. If you take a look at the 50 period moving average, it's a 10% move. The 100-day moving average, 13% move. And the 200-day moving average, we are 19% away from the 200-day moving average. And, you know, the 200-day moving average is like the classic longer term trend gauge. So we could still pull back all the way down to this 200-day moving average. And from a long-term perspective, I would argue you're still in an uptrend. So short term, could we have some downtrends? Like if you get down to the 1 hour chart, 4 hour chart, sure. But still the big term picture is still bullish. Show us the new portfolio of IBKR. I'm not going to do that. I have a public portfolio that I've run since March of 2020, but I also have some stuff in my life that's private. Like I don't want to share every single detail about my finances, though I should have showed that one because that one is up an insane amount this year. But I basically was super high leverage, or not heavy leverage, but super high risk in that account. I bought a bunch of stocks during March and April. And that account is up tremendously, obviously, with everything going on. But it is definitely a more aggressive portfolio, not one that I feature on my channel. So I'm just going to keep that one private for now. Maybe in the future, I'll talk more about it. But it's also only got 6 or 7 months of track record on it. And to me, you know, I've been doing this for a long time. And, you know, I might show that account if it has 2 years or a year and a half on it of performance, then I might start talking a little bit more about it because I think that gives you a little bit better of a picture. But look, let me be very transparent. Anybody who started a portfolio, I mean, this is where I started the portfolio. I bought stocks. The account had a pretty big drawdown, bounced back. And for those of you guys who don't know what I'm referencing, let me just, did I post it in Telegram? Let me see. I don't think I did. I did on my Twitter. Let me just pull up my Twitter for a second. So yesterday I posted about this. This is the account that I created this year and have traded it very aggressively. Like I bought high risk stocks. And when I say high risk, I'm talking about I bought things like Tesla and Palantir and Robinhood. And so this is a good example of like, I think that, you know, anyone can do this 1 year. Let me explain what I mean by that. If anybody bought the market in March or April, or if you started trading this year and your decision was you think the market's going to go aggressive to the upside, and all you've had since was the market ripping to the upside, it's very easy to look at this and say, look, this portfolio is up. I'm not discounting because I did really well with the picks that I made, but I think what's more credible is duration in track record, because if someone has a track record that's 6 months old, but all they did was buy gold when gold was going straight up, sure, it's going to look incredibly impressive. What's more impressive, though, is when somebody has a track record that's multiple years old and has seen multiple market cycles, up markets, down markets, then look at the performance. So when I show you this account, I'm pointing flaws in my own performance showcase. Look at the period. This is a very strong bull market period. The true judgment of this account will be, let's say we have a bear market for the next year. Then we look at the account. That's being as authentic and transparent as I can. That's a true testament to someone's ability. Is not, can you buy a roaring uptrend and do well in there? It's, okay, do you know when to kind of scale out of a roaring uptrend? Do you know how to manage risk when that trend stops? So when you're analyzing or asking someone for a track record, it's not just absolute performance, it's risk or its drawdown relative to the underlying, in this case, SPY. It's also about, has that portfolio seen multiple different environments? Again, it would be easy for me to sort of be like, look how good my account is doing, but I wouldn't be telling you the full story. I bought really aggressive stocks during a time where the stock market essentially went straight up. Now, in my main portfolio, not the case. On my Webull account that I talk about all the time, the public portfolio, I call it, the public portfolio I bought in 2020. Yes, we had a good period. Then we had a really tough period, a pretty substantial drawdown, and a year and a half period essentially where stocks dropped hard and went sideways and the market was much uglier. Then we had another bull period. Then we had a big sell-off this year, right? So we've seen multiple different cycles. That to me is a more reflective portfolio performance, which I talk about on my channel regularly. Nick, you're too honest for us. Appreciate you. It's just, I have too much love for the game. It's not fair to only look at performance done in a certain environment. If I created an account in August of this year and all I did in that account was leverage gold buys, that's not a genuine experience of performance. Now, if you looked at someone who's traded gold in a portfolio for 5 years and has traded down markets, up markets, down markets, sideways markets, etc., it's more impressive if their performance actually still looks good. Does that make sense? Are we following? Give me a yes in the chat if what I just explained makes sense. Because again, this is not just for analyzing people on social media. This is for analyzing your own portfolio. Okay? When you are talking about your own portfolio, ask yourself, when you're looking at your own performance, have you experienced drawdowns, tough periods, etc., right? Because if you haven't, if you've only like been long gold in an environment where gold has gone up, it's very easy to start thinking, wow, I'm really good at this stuff. So this guy makes like 1 trade a month. It's more like two trades a month. No, I'm just kidding. I trade probably, I want to say between 10 and 20 trades a month. This month, or in the last like month or so, I've been really heavy on the stock side. Look at this, by the way. NextEra Energy gapping up this morning. We also had XEL. Is XEL also making a move? Nothing here. No pre-market trade. Stock market opens up in 10 minutes. The Uber trade moving up here a little bit. I've been trailing stops on Uber as well. But yes, I am a swing trader, so I don't take a ton of trades. Look at this. So dollar index is up here this morning. US dollar trade up 9.59 so far. I think dollar, like I've been saying earlier, I think dollar has some upside. We'll see. US stock market opens up, like I said, in 10 minutes. So we'll see what it looks like out of the gate. Still looking for pullbacks when it comes to the indices, looking for specifically, like a 50% retracement on the NASDAQ and S&P 500 from these lows that we put in September. Kind of the September ended up being a really good month, guys. We, yeah. If I go to seasonality here, Nick answered to end the net worth battle. Tell us your net worth. That's not really something I like. Look, I have my public portfolio, which I understand. I mean, it started at $50,000. I've grown over time, but there are some things I keep private. Look at this. So year-to-date performance. So this is something we've been talking about. Point Nick is trying to make, focus on your own journey. 100%. 100%. There's no point in comparing to other people because there's always a bigger fish. And you can always bum yourself out looking at, oh, look at how much so-and-so made or how much I'm not making, or just focus on your own journey and you're going to be better off. So year-to-date performance for the stock market has obviously been really, really good. There's also something I think we just don't really want to fight, which is the natural tendency, historical tendency for this next period in stock market land to continue to go up. I wouldn't be surprised if you do see a rally into the end of the year. That's typically what happens during this period. Why is that? Why is October and November and December typically good months in the stock market? Well, the most common explanation for that I've heard is that a lot of portfolio managers, right, who manage people's money, a lot of them, let's face it, got scared and sold a lot of stocks and a lot of portfolio positioning in the April sell-off, and have been concerned and worried about the tariffs and all that stuff. And they missed out on a lot of this market move this year. What we often see, especially in years like this, where you got a lot of people faked out and a lot of people sold their stocks and got out of the market, sold their crypto, whatever, we see a chase for performance into year end. The reason that I would argue for that is, like, if you're a portfolio manager and you have clients that you're going to be seeing soon, you don't want to go to your clients and say, basically, we missed out, because there's a lot of millionaires and billionaires that just drop money in a bucket with these portfolio managers, right? And so the portfolio manager does not want to come to them and say, yeah, we didn't take part in the rally this year. They want to window dress, right? If you're window dressing for your clients, you say, yeah, we were in Nvidia, we were in Tesla, we were in, we were long the SP500, we had high allocation to stocks. You want to be able to go to your clients and say, look, we won, right? So what they typically will do, especially in a year like this, which I think is why we don't want to fight this, is that, we've had just a phenomenal turnaround this year. And I think there's a lot of portfolio managers who will not want to miss this move. And there's likely to be some pressure to buy the market at any cost. So again, when I look at stocks, are they expensive? Yep. Are they overbought price action wise? Yes. I think we have not had a pullback. This is one of the longest runs we've had without like a 4 or 5% pullback in a while. The biggest pullback we had on the S&P 500, 3.8%. You haven't even had a 4% pullback. And so I think you are due for pullbacks, but we don't have to get them. Again, if we're going to see, maybe we see like a drop in October, some pullback in October, but then I do think that gets, I think dip buyers come in and buy that, because again, I think you've had an incredible turnaround this year, and portfolio managers do not want to be the one to say, we got scared and sold our stocks into what was ultimately a really great dip buying opportunity. Look, if you sold into this stuff, it's okay to admit that you were wrong, that you sold early. Look, I'll be very honest. I sold a lot of my stocks around this area here. I still own, I showed you just a second ago, I still own a bunch of stocks long, but I sold a bunch of my portfolio recently. So look, I'm not playing it perfect either, but it's okay to admit, like, hey, if you miss this rally, you might have missed the rally this year. But a lot of people will start to say, well, like, I'm not going to miss the last leg. You see what I'm saying? That's what I think is the pressure to showcase that you were a part of the winning team this year. It happens every year. Let me take that back. It does not happen every year. A lot of times, historically speaking, the average 10-year performance, we have the data, let's use it. The average 10-year performance is to see a rally in markets into year end. Does it happen every year? No. In 2018, I remember there was a massive sell-off right around November, Thanksgiving into Christmas. It was just a straight drop. So could you get that? Sure. Again, history is a guide, but it's not a guarantee. So if we go back and just look at 2018 during this time, and I was trading during this time, it was a wild move. Look at this. So right around October, stock market was looking so strong. Like you had just this up year. You know, there was worries in the beginning of the year, and then you just had pretty much a grind higher. You had dips in between, which, to be honest, I would have much preferred a 2018 type of, dips having been presented to us. We haven't really had a lot of dips, but you can't complain about it. It doesn't matter what has happened. You have to look ahead. Well, you had this straight up move that ultimately turned into a straight down move. We had a sharp plummet into year's end. So just because you have seasonality on our side doesn't guarantee that the market will go up. So please understand, why do I show this example after just making the point that I think stocks will likely go up into year's end? Because you have to kind of pump the brakes on somebody who's brand new to this stuff, who hears, oh, stocks should go up in November and December if we're looking at history, and then goes and leverages their whole portfolio. And then you get a 2018 move and it blows them up. Don't be that guy. Don't be that girl. Stay away from leverage. Just, in my opinion, no need for leverage. It's just it's a dangerous game to play, because you get something like this can wipe you out. So I'm just showing you that as a reference point. So US stocks, they look invincible right now. They could pull back. And I think personally, it's a dip to buy, in my opinion, not financial advice. What's up, Cameron? Thanks very much for the $2, my friend. Coffee is on. Well, where's my coffee cup? My coffee's in the other room. Thank you very much for the $2, my friend. Best US broker to leverage trade stocks. So if you're looking for a margin account to trade with in the stock market world, so I'm going to just drop this link. So we put together a page because we have people who watch these streams from all over the world. And we've put together a page where you can actually explore brokerages. I'm going to drop the link here in the chat. But you can pull that up if you want. If you're in the US, just open this up. You can explore brokers and offers. And we've set up specifically some great extra incentives and offers if you use our links. You don't have to, but you'll be supporting the show if you choose to do so. And I really appreciate it if you do. But yeah, check out that page. It'll also make the process a lot easier for finding the right brokerage for you. Is IBIT a buy or sell, Nick? Taking a look at Bitcoin. Yeah, I mean, Bitcoin looks really strong. I think momentum favors the bulls here, but you know what I'm going to say. I think pullbacks are the better setup. So 2 scenarios for Bitcoin trades that I've been talking about would be if we saw price continue to explode higher, like if we got to run up to 130. I know this is bigger picture, but this move looks good. I'd like to see us clear this area a little stronger before buying where we currently are. I don't want to just buy where we currently sit. But the other scenario would be if we were to just get let's say we get a week down from here. I like this area of support at the 50% retracement. So I don't love it where it currently sits. I think from a trading perspective, I like this setup a lot more. And I believe we do have Edge Finder confirmation. At least last time I checked, we did. Let's see if we still do. Yeah, Bitcoin's getting a bullish rating in the Edge Finder. So I do like it, but would be waiting for a technical setup. Thanks for the question, though. How did you set up your fib retracement tools? I actually have a video on it. If you search up Trader Nick Fibonacci retracements, I think I've done 2 videos on it, but basically you can pause if you want to and just screenshot this if that's easier for you. Let's see, what else do we have here? A lot of stuff on the watch list, although I am out of time. We got our next show host taking over the stream here in just a second. Before I go, just so you guys know, we're doing an Edge Finder giveaway. We're actually giving away 3 copies. So your chances of winning are 3x bigger than usual. We don't usually do giveaways, but we are doing one this week. It's our spooky Halloween giveaway for the Edge Finder. If you want a chance to win for free, stick around for a second. I'll tell you how. It's free to join and it only takes a minute. Oh, also we got another one from Cameron. Thank you so much. Wow, I just saw that. Next question, $5 from Cameron. Thank you so much. My Oanda account doesn't allow me to trade crypto. Any fixes? Cameron, I don't know if you're in the US or not. You can comment if you're in the US. But Oanda has a crypto relationship. Actually, James, if you could help me out with this, we did a video for Oanda on how you can trade crypto in the US if you're in the US. If you want to check this out, maybe we'll grab that link and drop it here in the chat for you. Cameron says he's in the US. Okay, got you, man. Yeah, so they do have a way to trade with crypto, and I actually did a video for Oanda. It's kind of a flex. You know what's kind of a flex for me, kind of a full circle moment? I traded with Oanda like, I don't even know, 8 years ago. I still do. I've traded with them for a long time, and now I do content videos with them. And the people over there are great. Oanda people are super kind. Yeah, so we do some content, but I actually did a video on how to trade crypto with Oanda. So if you want to check it out, thanks, James. James, the producer, dropped that for us. You can explore the video that we did on that. Oh, that's the Oanda link. I'm talking about the video that we did on how to trade crypto, if you can find that one. Yeah, so we'll get that maybe dropped in the chat in just a second. But before we do that, let me just go ahead and finish what I was saying. If you want to join the giveaway for a chance to win a copy of the Edge Finder, which we've added some pretty cool stuff here. Check this out. So I added added back. I used to have this scatter plot, brought it back, the scatter plot from 1,000 years ago. We first built this thing. US economic heat map. We've added a whole bunch of features. We're going to give away 3 copies this week completely for free. To join, simple steps. Step 1, join the Telegram channel, which has been dropped in the chat here for you. Or if you're watching on a television or a desktop and you have the Telegram mobile app on your phone, simply scan the QR code. Just pull up your camera app, scan this, and it will take you to the Telegram so you can join really quick. Step 2, very simple step 2, and there's only 2 steps to this. Step 2 is to join the giveaway by filling out this form that we have dropped within the Telegram channel, which will randomly enter you for a chance to be our random 1 of 3 winners. So there's the 2-step process. Join the Telegram by scanning the QR code or clicking the link in the chat. Step 2, enter the giveaway by filling out this form entry. There you go. Okay, guys, that's all I've got here for today. Up next, we've got Marco taking over the stream. So don't go anywhere. He's going to be sharing some trade ideas and setups just after this quick break. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello, everyone. Welcome to my segment of the show. So I hope everyone is doing well. I hope you had a successful Monday. In terms of the markets, we can run through the watch list. So the NASDAQ is up, gold is up, silver is pulling back a bit, Bitcoin is up, Aussie NZD is not close to my entry, Aussie CAD pulling back, USD CAD kind of range bound, and Euro CAD is around break even, something like that. So that is the watch list for today. Just to repeat everything that is happening sort of in the markets, we do have the NFP, which keeps getting delayed. So is it going to happen this week? Not sure. Again, US government data may be impacted by the shutdown. Tentative events are subject to delay. So as you know, there is a US government shutdown, which means all of the data that is coming out is basically being delayed. And last week, we were supposed to have NFP, non-farm payrolls. Well, we're not sure when it's going to happen. Is it going to be this week? Not sure. Maybe the next one. Let me see what they printed on the next one. Okay, so it looks like they moved it to to the 17th of October, Friday. Interesting, but nothing is guaranteed so far. Another important event that I'm looking at that is this week, tomorrow, Wednesday, is going to be the RBNZ rate statement, official cash rate. Okay, that's going to be a big one. That's going to be an important one because I'm looking at the NZD. I'm looking to buy the Aussie NZD, so I'm looking for some bearishness for the New Zealand dollar. So I will be watching what happens during this event. It is going to happen in the morning my time, so when I wake up on the next day, I will analyze everything that happened. So will they actually cut rates? Will they be dovish? Will they be hawkish? It's going to paint a picture. It's going to give me an idea of the future projections, and then I'm going to make up my mind if I want to get into NZD longs, Aussie NZD longs, or maybe be more patient. So let me check out the comments. So Boofy says, hello, could you tell me where you learned all of this art of trading? So for all of the information, I highly recommend you join the A1 Discord. Okay. So in the A1 Discord, you get trade signals, trade breakdowns, fundamental events breakdowns, trading chat, and you basically get full support for your trading. Now, it's not just trade signals. You get exact trade breakdowns, as you can see here. So real-time signals. See? So exact trade breakdowns. So it's not about actually using the signal. It's about learning from the signal, okay? Because you get all of the information, exact levels, and all of our thinking behind every single trade. So yeah, if you want to check it out, you can use my discount code, which is MARKO. Okay, that is the discount code to join the A1 Discord and to get the Edge Finder if you want. It is for the Edge Finder software, which I heavily use to build a sort of trading bias. And something I do want to mention, since you have a question, like kind of a more general question as far as trading goes, and I've been writing this article for a Croatian news outlet about retail trading and in general how people can start to trade or what are the main pitfalls of trading. And I actually thought about this and I came to the conclusion there is 3 major issues that people have when they first join, let's say, or start learning to trade. The first one is they have unrealistic expectations. So they believe they're going to make 100% per year every single year. That's very unrealistic. That's not going to happen. Okay. Realistic expectations are somewhere around maybe 20% to 30% per year on average. And you have to know that the best trader in the world, Jim Simmons, on a sample size of 30 years, he made 62% return per year on average. So if he cannot make more than 100% per year, then you're not going to have a very big chance of beating him and making more. But this is realistic. So that's the first pitfall. They have unrealistic expectations. Second one is they don't have a trading edge. Most retail traders, they don't have a trading edge. When you ask them, what are you trading? What is your trading edge? They say, I have identified a trend line like this. We have broken the trend line and we are approaching a fair value gap. So that means I'm going to buy. Well, that's not a trading edge. That sort of an approach may work for let's say a period or two, right? But eventually, that sort of an approach will stop working. You need to stack multiple confluences. So you need to add technical analysis, fundamental analysis, sentiment, seasonality. Of course, Edgefinder does all of that automatically. You have the sentiment, commitment of traders, retail positioning. You have the seasonality. You have the technical analysis, and then you have the economic data. You have the fundamental analysis. So that's the second one. They don't have a good enough trading edge. And now for the third one, the last one, is they don't have enough capital. So going into trading with just $1,000, $2,000, maybe even $5,000 or euros is definitely not enough. You cannot do proper risk management with that sort of capital size, because if you want to live off of your trading income, you're going to have to risk like $200, $300, $500 per position, and then you will most likely blow your account very soon when you get into your first drawdown. So those are the three main issues with trading, and maybe this was interesting to some people, maybe this was interesting to some beginners. Of course, the solution for capital is get a job at a real prop firm like SMB Capital. They provide you with everything. Or look into prop firms like DNA Funded, which I will mention a bit later. Now let's do the charts, then we'll talk about DNA Funded. So let me see what you guys are looking at in the markets. Hey, Joshua. Hey, Slugmeister. So you went short NZD USD. Cool. Nice. Okay. We did talk about this currency pair yesterday on the stream. I told you that I don't really have a big trading edge. So I don't really have a big trading edge on this one, in my personal opinion, with a swing trading approach on the daily chart. So if you had some sort of a different approach, maybe you took more of a short-term setup, that is great. I can see that this daily candle has been a bearish one. Why, if someone is asking, why do I personally don't like to short NZD USD? Well, I'm still waiting on RBNZ interest rate statement. So that could have a big impact on the price of the New Zealand dollar. I do like the dollar. I think short term, the DXY is bullish / maybe neutral, but more bullish than neutral. And I do think the New Zealand dollar, if you look at the data, it's not performing as well as it could be, let's say. So if you look at the most recent data, let's check NZD. So only 25% of the data is coming out bullish. And then we look at some trends such as the GDP. So this is some more long-term analysis, kind of all over the place. Let's look at the last 2 years. Yeah, kind of all over the place. Look at the unemployment, NZD. So I would say it's kind of rising. You know, in January of 2024, it was 3.9. Now it is 5.2. Not the best. Inflation. Let's see. Rising on inflation, and it's above the 2% target. Most central banks, they like to target 2%. So they like to keep inflation around 2%. That's the consensus of a healthy inflation. We're above 2.7. We're in an uptrend, I would say, in the most recent data. That's problematic. That's maybe signaling a bit of stagflation in New Zealand. So shorting the NZD seems to be the right answer. And if you were short from, let's say, let's just hide this. If you were short from July, you would probably make some profits as a swing trader. Okay. So Martin says USD Swiss and Euro dollar. USD Swiss, I'm not really, I haven't done a lot of research for the Swiss. It's not on my watch list. It's not sort of a very interesting currency pair for me personally right now. So USD Swiss, I don't have a bias. I can only tell you that this looks pretty similar to the DXY. See? And as far as the dollar goes, I would say a bit more bullishness could happen like this. Now, what is pretty interesting is people are discussing the US government shutdown, and they're saying the US government shutdown is bearish for the dollar because the Fed is going to have to cut interest rates no matter the data, because they don't have access to the data. And then some people say it's bullish for the dollar because the Fed doesn't have access to most recent NFP, so they're not sure whether to cut or hold. Well, I would say take away the US government shutting down, take away all of the NFP not coming out, and just focus on what was happening before the US government shutdown. Before that, they signaled 3 rate cuts of 25 basis points, but they also sounded hawkish. They flagged inflation. They delivered sort of a hawkish cut on the 17th of September. So I would say we're still on that sort of trajectory where the rate cuts have already been priced in, and now any sort of commentary about inflation is creating a hawkish effect and is actually pushing the DXY higher. So that's my stance on the dollar. Now, you mentioned euro dollar as well. Euro dollar for me is not the most interesting thing to trade right now, because I think the euro is overall as a currency kind of strong compared to other currency. It's all about the relative strength, right? It's all about the relative performance. Okay, the latest data has been bearish, so only 20% of the data is coming out better than expected. But I would say that relative to other currencies, the long-term trends, the long-term data, I'm talking about the GDP, the unemployment, the CPI, it's all coming out better than most other currencies. The dollar, I just mentioned, I'm a bit bullish on. So bullish on the euro, bullish on the dollar in the long term. That doesn't really produce a massive trading edge for me to take advantage. Okay, so euro dollar, my personal forecast is this. Until we get a new catalyst, until we get a new reason for this market to move up or down. Okay, so for the euro dollar, I am being patient. Okay. Constantine wants to see gold. For gold and silver, just massively exploding higher, looking very, very bullish. Looks overextended, looks overbought, looks to be kind of, it doesn't look to be exhausted, but you know, it looks very overextended. Is it the reason for me to short? Absolutely not. I would definitely not want to short this crazy gold market. I would want to buy, but I don't want to buy the all-time highs because there's a high chance of a pullback. So I'll be patient. I'll wait a bit more. I'll wait for a pullback, maybe to, let's say, 3.792, something like that. Then we are already close to 4K. That is pretty big. That is pretty crazy. Let me see. So from the start of this year, we are up 52%. Okay, that is pretty crazy. That's better performance than the S&P 500, I believe. So this is all with concerning the inflation. I would say inflation is one of the major catalysts for these crazy prices. Rate cuts are coming. Trump, big, beautiful bill. Inflation is still above target in the United States. We can take a look if we click on inflation data, USD, rising 2.9%. Okay. So, yeah, I would say not the best. That's kind of my analysis. Nothing has changed. I've been repeating myself for a couple of weeks now, waiting for pullbacks. I don't want to buy these highs. I definitely don't want to go short. So that's the general story. what do you think of NZD USD shorts? So, as far as NZD USD shorts go, let's see. We talked about the fundamentals. I told you I'm a bit more patient for this week. I'm waiting to see what will happen with the RBNZ. If they come out very dovish, if they come out bearish for the New Zealand dollar, would I look to sell here? I don't think so. I think there is better opportunities out there. I don't want to get my capital tied in with the NZD/USD. As far as USD trades go, I don't want too much exposure. I'm long USD CAD. So of course, if it does hit the take profit or the stop loss, I'll be out. So we're pretty close to the take profit. But NZD/USD, so far, I prefer to buy Aussie NZD. Just the trend is more powerful, looks a bit better, looks a bit more interesting. So this is what I'm looking at. NZD/USD, I mean, we are close to the 20 MA, so that's nice. We rejected off of that. You know what? Let's wait for the RBNZ interest rate decision, and you can ask me again. And then I will reevaluate. So what are your views on the yen? So as far as the yen goes, JXY on the daily chart, of course, massive weakness. We got an unexpected winner of the prime minister election. So on poly markets, Japan, Takaishi won. Koizumi was supposed to win. Here, this guy was supposed to win, but he didn't win in the end. Instead, it was Takaishi. She is dovish. This guy's hawkish. So an unexpected event happened in the markets. When an unexpected event happens, there's a quick repricing, especially if that event happens during the weekend. So when we opened, there was a massive gap lower. Does this mean continued Japanese yen strength? Well, usually when there's such a huge gap, usually the gap gets filled, especially in Forex. Gaps get filled pretty quickly. It is just the way that the currency markets work. Is that going to happen? Will we crush this resistance level? We shall see. I don't have a crystal ball. I can just look at some levels and I can tell you my personal game plan. And my personal game plan is to wait for a breakout out of this level. So I have this support. I have this resistance. I have this support. If we break out up or down, I will look to see if we can get some setups. If we break this resistance level, maybe some buy setups on UJ would be nice. It's positive swaps, mind you, which is always good. So if you go to the Edge Finder, carry trade scanner, you type in UJ, positive swaps, okay? And nice positive swaps, pretty heavy positive swaps. Look at the interest rate divergence. Pretty nice, pretty healthy. Now, I forgot to open my DNA funded, so I'm not going to show you my dashboard, but to quickly talk about the sponsor of today's live stream, it's going to be DNA funded, okay? So if you're looking to expand your trading capital, you can use a special discount code only for you guys watching the live streams. The code is A1 Live. You get 25% off any of the challenges. So you can see what they offer. I usually go with a two-phase account, 50K, 100K. I think this gives you the best conditions. It also gives you static drawdown instead of trailing drawdown. The price, it's competitive, exactly what you want to see. Most of these prop firms that offer 50, 60, 70% discounts, they're scams. They're going to be here for a couple of months, then they're gone. So competitive pricing, but it's a lot cheaper if you use our code, which is A1 Live. Then it's 25% off from this price. So yeah, if you're looking to expand your capital, choose a reliable prop firm. This is a good way to go. Okay. Now back to our regularly scheduled program. So now you know the levels I'm looking at. I'm focusing on UJ, I'm focusing on the USD yen, and I want to see a breakout higher of this resistance level. Sell gold, buy DXY short term. I wouldn't sell gold. I think a lot of retail people, a lot of retail traders, I'm a retail trader, but a lot of retail traders are going to lose a lot of money by shorting this absolute explosion of price. If you're a scalper, then maybe you can extract some value out of this. Maybe you can sell on some of these pullbacks, but the pullbacks just seem to be non-existent. It's just a massive train going up. Again, zoom out. You have a massive edge if you just buy, right? The odds are massively in your favor if you just buy gold. But still, retail traders want to short gold. Unless you have a super crazy trading edge that no one else knows about, that is super advanced, I would say you don't have no business shorting gold. Okay. Most of you that want to short gold will lose money on multiple occasions as this thing keeps flying higher. If you have an extremely good trading edge, tested on a lot of data, tested in the live markets, tested through different market conditions, then you can prove me wrong. But that is very rare. The traders that have that sort of an advanced edge usually work at prop firms like SMB Capital, which is like one of the best prop firms in the world. What do you think is better, ETFs or individual stocks? Well, ETFs or individual stocks depends. I think it depends. If you want to hold them for long term, I think just buying individual stocks is a better option. If you want to trade something for the short term, then an ETF might be a better option. Again, I trade CFDs. I don't really do ETFs. Or sorry, do I hold ETFs? Yeah, I think I actually hold an SP500 ETF. So that is correct. I'm not the right person to answer this. Again, I'm a heavy user of CFDs. So I trade CFDs. I'm in Europe. I'm kind of limited when it comes to US stocks, the US stock market in general. I don't have the same ETFs as you guys in the United States. So this may be a better question for Nick or someone else living in the States. But yeah, I do have some S&P 500 in a form of an ETF through Interactive Brokers, which is just buy and hold. You know, just buy and hold for 10 years, 15 years, 20 years, however long it takes. Marco, don't you think it's going to be another sell the news event on NZD rate cut? Well, possibly. I just want to get some forward guidance. I just want to get some future projections. Again, I'm looking at the daily time frame, so I don't think even if you do get a sell-off that it's going to be massive. And I would say that extra piece of information will be a good confirmation for me to proceed with shorting the New Zealand dollar. Okay. How is your DNA fund challenge going? So let me just open it up. So let me stop sharing the screen because I need to log in. I don't really want for you guys to get my password. So let me see DNA funded. Log in. Okay. Okay, so I have opened it in the background. Let's share it. I think we need, so James, if you can just share it, great. Thank you very much. So this is the challenge that I personally have running. Looking pretty good right now. It's around break even. So this is the equity curve. See? Kind of around background break even, maybe even in a bit of profit. What I'm doing is I'm basically getting trade signals every day from ChatGPT. We went into some heavy drawdown. Now we're back up. what was pretty cool is ChatGPT was long USD yen over the weekend. So when we gapped up, this turned out to be a massive winner. And I have 2 trades open. It's a buy on the S&P and it's a buy on Euro Yen. Both trades currently in profit. So yeah, kind of around break even right now. Just going to continue testing this 50K account. We'll see what happens. And no, this is not financial advice. No, this is not the signal for you to get your signals from ChatGPT and put in thousands of dollars per trade. This is just for experimental purposes, just for content for my YouTube series that I'm doing. So don't take this too seriously, please. But it's quite cool to see the performance of just trading with ChatGPT. And I think in the last 100 days, ChatGPT is up, or 110 days, ChatGPT is up. I think it's around plus 22, plus 23%. With minimal drawdown, mind you, with like 3 to 4% drawdown. Okay. Lynn says, good morning, Marco. How much capital is needed for crypto trading? Well, for any sort of trading, depends on what you want to do. Do you want to be a full-time trader, pay off all of your expenses with trading, or do you want to have a full-time job, business, side business, trade on the side, or invest on the side? If you want to live off of trading, I would say 50 to 100K euros, dollars is minimal if you want to do proper risk management and expenses paid for the next 1 year. So living expenses covered for the next 6 months to a year. That's going to set you up for success, in my opinion. Is it the best way to go? I wouldn't say so. I would say having a primary income source that covers your monthly expenses and then trading on the side, so that everything that you make in trading either goes for extra expenses or saving up and, let's say, keeping it in your bank account. I think that's the best way to go. If you have a full-time job, part-time job, business, side business, you want to trade on the side, I would say 5K, 10K, 15K, it's enough just to experiment, test your strategy, build a track record, make some extra money. You can do some funded challenges as well. Of course, I only recommend doing funded challenges if you have a proven trading edge, both in back testing and in live testing. Most of you, unfortunately, don't have a proven trading edge, just the statistics. 95% of traders lose money. So please, before you do start the funded challenge, make sure you actually have a proven track record, everything written down black on white with your statistics that prove you are actually profitable. Okay. So we are approaching the end of my segment. So you guys are really interested in the Swiss. I don't have a lot of, let's say, opinion on the Swiss. I haven't done much research. I can do GBP/USD, and that's probably going to be the last one for today. If you want to get more chart analysis, I will be here. So I'm live streaming for the whole week. I'll be here. We can do more requests, do more questions tomorrow. You can check the live stream schedule with the A1 live stream schedule. So if you just go to here, A1 live stream schedule, you can see tomorrow I'm at 10 a.m. Eastern Standard Time. Thursday, 10 a.m. Friday, 9 a.m. Okay, so GBP/USD. I'm bearish on the pound. I'm bullish on the dollar. I want to sell GBP/USD. I think the pound is doing pretty badly, while the dollar is doing okay, kind of bullish on the dollar. So for GBP/USD, I would like to see us break this key level of resistance. Okay, or sorry, support. So if we can break this, I would look for sell setups. What I don't want to do is I don't want to get stuck in a range. Okay, that's something I don't want to do. So stuck in this massive sideways range. I want to see us break out. Of course, as I told you, I'm looking to sell. So if we break the resistance level, I won't do much. But if we do break the support with momentum, I think it's good to look for buy setups. Also, Euro GBP, I'm looking to buy. I like the Euro. I don't like the pound. I don't want to get stuck in a range either. So I'm looking at this level of resistance for a breakout higher, and then I would be looking for some buy setups on Euro GBP. That's my game plan for the pound pairs. Quick recap on my watch list, and then we're done. NASDAQ, bullish. I want to see a pullback. Gold, I want to see a pullback to buy. Silver, same opinion. Bitcoin, looking nice. I'm looking for this. Yeah, I forgot to talk about Bitcoin, which is kind of the star of the show this week. So I want to see a break and retest. And then I would enter at this level. Of course, this is going to be a signal in the A1 Discord. If you want to get these signals, make sure you join the A1 Discord. Aussie NZD, waiting to see what will happen with the RBNZ. Aussie CAD, I'm trailing my position. USD CAD, I have a take profit set. Stop loss is somewhere around break even. Or is it though? No, sorry, stop loss is still I think at the original level. So waiting to see if we hit the take profit. Euro CAD, I'm trailing my position. So long-term holds. I'm not looking to exit these positions early. Aussie CAD is positive swaps. USD CAD is positive swaps. I'm very bearish on the CAD. I think it is the best currency to short in 2025, possibly even in 2026. It has the weakest data. Housing market is crashing in Canada. It is just a bad situation, so we want to go short. That is about it from me. Thank you very much for watching. You can catch me tomorrow, and good luck in the markets. Let's see what the RBNZ has to say. Goodbye.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make subscribe for future streams, and as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.